Well, I think that we can just quickly cover it and all go home because that was largely as expected, right? This report. But seriously speaking, I think that today's report doesn't add much in terms of the new information. We already knew that consumers are still holding up. They are spending on goods. So goods spending increased by 0.9% in July, and we spend less on services. So that is telling me that consumers are becoming more choosy in what they
All right.
have to spend on. They are stocking up again. Look at the advanced trade report that also came out along with the data on inflation. We saw a huge increase in imports. So I think we have some kind of a deja vu here because we're stocking up again ahead of the new
Right.
set of.
Yelena Shulyatyeva with us with the Conference Board, the senior economist there. Yelena, let me ask a dumb. It's not like Damien would ask this. I'll ask a dumb question. On a scale of 0 to 100, where we say the tariffs have been passed on to the consumer in America, where are we on that continuum? From 0 to 100, are we like at 10, where it's barely in effect, or 50 midpoint, or is there now becoming a huge effect of tariffs on our listeners and viewers?
I think we're in the early stages of that. And Sarah was referring to that as well earlier. I think we're in kind of like a 20 to 30% on that scale, probably. Look at what is happening. So today we get an expiration of the de minimis tax tariff exemption. So that alone, according to the Conference Board research we published earlier this year, will add a few tenths of a percent to PCE inflation later on this year. I think that is an important thing as well. So I think that we stocked up inventory with cheaper inventories earlier this year, and now it's just the time when we're going to start seeing inflationary pressures. So I think they will continue to build into the end of the year and going into the next.
Yelena, sorry about that. Yelena, I know we could stick to the U.S. here, but I'm going to talk about Canada here because this GDP print was pretty surprising to the downside that we just got at 8:30 this morning. And, we're seeing growth kind of, coming in a little bit across the board. And I'm seeing central banks literally across the board from Mexico to the U.K., Poland perhaps next week, the Philippines this week. They're cutting rates. Are we missing something that other countries are seeing? Is growth slowing more quickly in some of these other nations? And is that why the central banks are acting so aggressively?
Well, you have to when you disrupt the system, and that's what we see, right, with all the new policies and policy actions, something will break somewhere, right? So, and you have to react to that. I just don't think that in terms of the U.S., we are, heading into some kind of a downturn at this point. I think growth in the U.S. is still solid. Despite all the disruptions. And it's a very tough choice for the Fed what to do the next meeting and going forward.
We continue with Yelena Shulyatyeva, the Conference Board. Bond market showing higher yields, 10-year up a solid 3 basis points, 4.23%. 30-year bond not at 5%, 4.91%. Equities do better than before the 8:30 report, moving from negative 25 futures about now negative 18 futures. The VIX 14.56. With Yelena Shulyatyeva, Damien Sassower. Damien?
Yeah, so Yelena, look, we've been talking all morning about the impact of inflation on growth, the impact of inflation on pretty much, some of these local economies, not just in the U.S., but abroad. But what I really want to get a sense of, what are you seeing on the ground here? Just real economies, the real purses and the pocketbooks that are being, do you see consumer discretionary spend coming down here in the U.S., or is there potential for it to surprise to the upside still?
I think we see a slowdown, and based on our Conference Board consumer confidence data, you do hear a lot of concerns about inflation and how that will impact consumers going forward. So look at this report again this morning. So services were pretty weak, even though goods spending rebounded from its tepid pace based in the second quarter of this year. So that tells me that, consumers are really facing tough choices. They have to spend more on food and things like that are necessities, and they have
All
to
right.
forego what could be a discretionary spending, like going to Disney World or other
Yeah.
things.